Morning and welcome to Trading with Larry. It's Larry Benedict, joined by my senior analyst, Clint Brewer. We're here after the first down day and feels like a century, but I think you helped me yesterday pick up on some clues on the market, which I think continue on a bit today. One thing that you looked at yesterday was Bitcoin, which is probably the most overowned speculative asset over the last bunch of years, not performing the way it did on the last rally that we had, which, S&Ps are up this morning about 10 handles. Got a little sketchy mid afternoon yesterday. Market was really dumping, and I think a little of that, which I'll throw it to you, was Jerome Powell speaking, throwing cold water on the market in the sense that he thinks that it's overpriced is sort of the sentiment from that meeting that he had. Which, if the Fed is seeing that, and we're seeing that, and everyone's seeing that, it's pretty much going to be a problem moving forward at some point for the Fed as we move here. And the it wasn't really a big down day. What's going to happen when we go down 2-3% in a day? That's going to whip up volatility to a crazy number, and it's going to really hurt people because you could see on a 60 basis point move on NASDAQ yesterday to the downside how, I don't know if I want to use the word sketchy, but how iffy the market got during yesterday's trading. So, and it was weird because bonds actually held in, yield down to 410, 411, still not near Fed levels, but a little bit better. And I'm watching another thing that I think is interesting is, and then I'll throw it over to you. I'm watching Europe, and the European stock markets are, they're up, and the DAX is up 18% for the year. But in February of this year, the DAX was up 23%. So the DAX is like 5% lower than it was months and months and months ago. And somehow we're, 20% higher in S&P or a little more, and 45% higher in NASDAQ. So there's a lot of divergences out there. I don't know if that has to do with the currency, but to me, if I'm a buyer of an international market, I would want to have a weak dollar to be buying that market so that I have the ability to take advantage of the dollar weakness by being in another country. So it's weird. So there's a lot of divergences out there. Today could be an interesting trading day. When they fall and then they open up. They're not up a lot, but for our markets, they're up 10 handles. Maybe that's an area, to look to get short off the opening to have the market again fall. But listen, we can't really have two down days in a row. I don't think we've seen that in forever and ever and ever. So, I'll throw it to you. You can give some insight, get us going this morning. I just want people out there to know I have kind of a hard stop today at 9 o'clock. So we'll get very concise and we'll go for the next 25 minutes. So on to you, Clint.
Yeah, try to cover a lot in a little bit of time. Yeah, I mean, Powell came out yesterday and threw some cold water on the rally. And we have Powell, the stock analyst, coming out and saying stock prices are fairly highly valued, which you saw the reaction and the growth in tech space more. I mean, I think large cap growth was down a little over 1% on the day. Again, it's in the grand scheme of things, it's not a huge number, but relative to what we have seen, I mean, is that a little bit of a freak out? And I think it is because, look, I can't figure out where the Fed's going right here. And maybe that's what he's trying to do with his comments, because it's like after the July meeting, they were focused on inflation. Then he comes out with that Jackson Hole speech, and they pretty much cornered themselves into a rate cut by flagging all these concerns around the labor market. And now he's out yesterday, and I jotted down some of the comments he made. I was watching his speech, and he's saying managing labor and inflation risks are challenging. It's no longer tilted in favor of jobs data. There's no risk-free path. And then he said interest rates are in a good place to deal with either threat. So it feels like he's trying to temper expectations on future cuts from here. And that's a huge catalyst for what's going on in the tech space. I mean, if they're cutting rates and financial conditions are already much looser than average, I mean that's that's rocket fuel for some of this tech trade that's been working lately. And you saw a lot of those names like profitless speculative growth tech just getting hit pretty hard yesterday on the back of his comments. And so I don't know if he's trying to intentionally create confusion so that the market's not surprised on what they do next. But I mean, he keeps flip flopping all over the place on rates. And maybe to alongside of that, what's going on in Europe versus the U.S. It's like, well, the U.S. is starting to cut rates now, but Europe is actually it looks like they're on moving to be more on hold too. So I don't know.
Yeah, well, I think they went first. Europe was cutting early in the year when we were surprised that they were. We weren't. Um, I think you said it kind of right in the sense you're saying he's trying to throw cold water on potentially two more cuts this year. I don't think he's going to do two more cuts. I mean, that's just my opinion. I could be wrong, but I talked a little bit with you about this yesterday. You got silver bullets, in your chamber. You don't want to use them unless you really have to. And yeah, he's backed into the corner by the market. So the market's really the Fed in a way. You heard him yesterday. I don't know if how closely you were listening to this, which it kind of threw me back to when I was very very young and I was on the trading floor when I was in my 20s, and we would be trading, and all of a sudden it would come across the tape: Paul Volcker raises rates, or Paul Volcker cuts rates. The Fed was Paul Volcker. Okay, there was no Fed, there was no 20 guys making the call. It was the Fed head was making that call, and that call was built in to basically surprise the market so that there would be displacement to making the actual move mean something. And what he actually said yesterday, which was kind of disturbing in a way, was that he's like, the Fed should have they should have full transparency. They should have no, you know, reaction to, anything that's going on, and everything has to be telegraphed to the market in a crazy way, which to me doesn't make a whole lot of sense because, listen, when you need something, why wouldn't you go like they used to go intermeeting. They would go intermeeting if they had to. They would never go intermeeting right now. Ever. It would never happen. Unless, we even during COVID, I believe I could be wrong on this. They were all scheduled meetings, but I could be wrong. I mean, you may want to check that. But I just think by him doing this, it's setting up for really big problems because the Fed has to hold their independence and they have to be able to basically make what they're doing have an impact and not listen. I think they go into the meeting and they look at Fed fund futures, which is crazy. And then they make the decision like, oh, the market has a 90% chance, so we got to do it. I think it's the opposite. Like, when was the last time the Fed really surprised on a meeting by sort of
Like
doing
one year ago, one
when
year
was
ago,
that?
they
What
came out and cut by 50. I think that, I
and the
mean,
market was looking for 25?
yeah, I mean that was, I mean, you don't see 50 until they, unless there's like a panic. I think that caught the market off guard a little bit, but
Yeah. I mean, but I like to see that. I don't remember it that well, but I'd like to see that. And I'd like to know maybe tomorrow we could look at odds for Fed funds
I I pulled
during
it up
that
right
time.
now. Here's what I think is interesting is that you've had, so I'm looking at the CME odds. I have it pulled up currently, and it's showing 4 rate cuts through next year. So if you look out, pretty much it's done. So 4 more cuts. That's on CME odds. Right after the Fed, that was somewhere around 6. But then here's what's interesting. So CME odds are coming in, but then after Powell's speech yesterday, the 2-year yield took a big dip. It dropped almost 10 basis points yesterday after his comments. So this is where the two conflicting signals all around the place.
Yeah, but well, I don't know. For me, a year out or even 6 months out doesn't mean anything. I mean, it means something, but it doesn't really mean anything. And if they're front end loading another two cuts by the end of the year and one in January, February, I mean, that how do they know next year what's going to be? Are they expecting massive inflation? I mean, why would they not keep cutting? First of all, why are they cutting? Like a Fed funds at 3.75, 3.5 is generally low in a market that's chugging along the way this market's chugging along. I mean, for years and years, we traded 5 was like normal. Like where we were was normal. The only reason why this time it wasn't normal is because we were at zero. So to go think about, there were a lot of blowups behind the scenes with a lot of lending companies that were lending. They were borrowing basically short and lending out long. And basically they got blown up on that trade because, as rates kept going up on the short end, that spread actually inverted. But I don't see any reason that the Fed needs to move right now. A quarter at the next meeting. Like why? Like what is the problem in the market? Why do we need another quarter point? Like what's that going to do for anybody? Honestly, I mean, they're just backed into a corner right now, and I think yesterday in a way he was trying to get out of it. He was trying to get out of having to make that move. So I think it's a little scary. I think the Fed's in a difficult spot. I think, listen, he touched on it a little yesterday with overvaluation or what was the exact
Fair,
statement?
fairly
They're
highly
priced
valued.
fairly high or something.
Yeah, fairly highly valued.
Right. So that's the case. So the bottom line is, what are they going to do about it? Like, listen, the Fed actually, I know it sounds crazy, but I think part of the Fed mandate is to pop bubbles. I think that's really why do they want a bubble that's going to ruin people? Listen, if they pop this bubble right now, it would be probably as big a calamity as '08, literally, with the amount of people involved. I said yesterday, one of my sons is trading at dinner. Okay, in the middle of the night, they're trading. Everybody's involved. Everybody and their mother is long Nvidia. Okay, they're long Apple, they're long Tesla. I mean, it is the most concentrated tape that I've ever seen since I've been trading. You know that. We talk about it. It's like, oh, look at the seven stocks. Listen, let's say the Mag 7 and three other stocks, or four other stocks. Broadcom, Oracle, top 10 market cap stocks. Let's say they all went down 2% in a day all at the same time, which, Jane Street would never have that happen. Okay. So, the bottom line is we would be down probably 5% on the market with all these other stocks, following along. So, really, it's like when I come in and I ask Thomas, touchdown T behind me, I'm like, what stock is up, what stock's down? It's every day. Oh, Tesla's up 4 and Apple's down 2, and it's crazy. So it's like a manipulated computer that's running the show. And when this show ends and we get back to normalcy where all seven, listen, I would love to run a scan to see the last time all seven stocks were down in one day, and I'll bet you it was forever ago. Okay, so what's going to happen when the I'm going to call it the jig is up and the rig is up? I think you're going to have outsized move, and I think that's why. I mean, what is volatility up 8 days in a row, 9 days? I don't know if it's probably down today, but I haven't checked it.
4 or 5 days in a row. Here, just speculating on what the Fed's going to do here. First of all, Fed funds right now is about 1% above core inflation. And if you look back historically, that is a neutral policy stance. If you go back to the entire history that we have of inflation and Fed funds on average is 1% above inflation. And that's exactly where we are right now. So, you could make the argument that one cut in policy right now is neutral, especially if it looks like inflation is going to pick up in the months ahead. So that's one thing. But here's the other thing, just speculating on Powell for a moment. His term's up in May. And there's all this, what the Trump administration wants to do. Bessent is out this morning saying that Powell should have cut 100 basis points at this last meeting. So Powell's, he's probably thinking ahead, saying, all right, I know what my successor, what they want to do. Is that a reason to just keep rates at this level, keep rates high into the end of his term? Because he has that mindset that rate cuts are coming in, the next 8 months or so.
Well, let me ask you this: what's going to happen when the new guy gets in, whoever that is? I can't imagine. Maybe Trump's going to appoint himself. Who knows? But like my question is why, unless they see, and Besant may be getting a look at this, maybe they're seeing really, really, like I think there's really, really weak employment, really weak, like crazy weak. They're scared to put out the negative jobs number.
That's why they don't want to put out the numbers.
Right. Well, they're afraid to put out the number, especially now with Trump firing everyone for bad numbers. What are they going to do? And then the question is, honestly, if you really think about this in your mind, if rates go to 2%, how is that affecting employment? These tech stocks, you see, listen, you see what's going on. We discussed this yesterday with Nvidia, and Nvidia is BS. Okay, I'm just telling you, BS. Okay, they're probably, listen. Amazon's making their own chips. Microsoft's going to make their own. Everyone's going to make their own chips. These guys are their days of being this Goliath are numbered because all you have to do is hire developers, from that company or from a, existing company that makes chips and do it yourself. So what Nvidia is trying to do is they're trying to lock in, like this OpenAI, Clint, is insane. They've signed billions and billions and billions, trillions. I mean, I saw yesterday they did a $600 billion deal with Stargate or something. Like, I don't even know what they sell or what they're doing, but they got trillions and trillions of trillions of commitment from one company. And if this does not remind you of the internet bubble, I don't know what is. I mean, this
Oh, this
company
is
could never make this money. Never.
this is the internet bubble through and through. This is a little bit of 2021 we had this, but this is the internet bubble. I pulled a stat just for the show today that I saw this morning. It's from UBS. A basket of unprofitable tech companies is up 21% since the end of July, versus a 2.1% gain for profitable tech, and the Nasdaq's up 6%. And then the analyst went on to call it a crap rally.
Well, how about this? I don't even know really what Spartle AI is or whatever, but I have friends that bought these stocks at $1 or $2 and they're $6. They're fraudulent and they don't want to sell it because they think it's going to like 50. I'm just telling you, the amount of froth and speculation in the tape is epic. It's got to be considered epic. I
Well,
mean,
did you see Alibaba overnight?
no, what did it do? I know
No,
they
they
did
well
rally.
they use the magic word.
Yeah, well,
They
they're getting out of like the Amazon
they,
model and they're
they
going to be an AI
no
company.
they said the magic word. They said AI overnight. They said
Yeah.
they're hiking their AI budget above 50 billion. So they've already said they're going to come out and spend that, but they didn't actually give a number. They just said they're going to spend above what they're already planning, and that's sent the stock. The stock is up 9% pre-market right now.
Well,
So
yeah, I mean, this is the world we're living in. It's just funny when you really look at Nvidia's deal with OpenAI. It's the scammiest deal that I've ever seen. I mean, they're committing nothing, and then on the back end, the whole deal is that they're going to buy their chips if they happen to hit it big. So it's they're not spending 100 billion of anything. You
that's what I
know,
said yesterday. I think it feels like Nvidia is financing the purchase of their own product in a backdoor way.
and they're doing it all over the place and there's a lot of players in the space, so I'm a little concerned moving forward here that, I mean, to me this just doesn't feel, it feels so over speculative. And like, I don't even know what the Spartle AI, whatever that is, what those stocks are, but they're they've gone crazy. And no one wants to sell them because they think it's going to be the next XYZ. And I think maybe there's something to be said about setting up portfolios for the midterms. That may include, being short Bitcoin at some point if they're going to turn over one of the houses to where Trump is not going to have the easy policy route that they've had now. So I don't know where to do that, but that's something I think in the next couple of months that we should start setting up here. Hey, what stocks and what sectors are not going to do well when we're in a position of having split house or having non-control? That I think is interesting. So I think we should do that moving forward. Just look, because I think that's a way you can make a lot of money. Because a lot of these stuff are overhyped. There's no rule regulation. Trump's able to bring, the president of the United States is able through his kids to bring any company public that he wants. I mean, it's pretty amazing.
Did
So,
you did you see Lithium Americas overnight?
mm-mm.
So the U.S. is pursuing a stake in Lithium Americas, and the stock is up 70% pre-market. It's part of they're trying to renegotiate a loan made by the Energy Department, and part of it is to potentially take an equity stake. This is crazy to see all these the government taking equity stakes in all these companies now.
I understand, and they're just backing their bad situation. And the only time I've seen that obviously is in '08, where they had to buy into the banks. But you know what? They didn't even want to make that trade for profit, which is so crazy. So they bailed the government, bailed out Bank of America, Wells, Citi, taking stakes, and they came out of those stakes. And I bought stock in all of those names when the government came out of the full stake. Um, Basically, Bank of America $2 and change. They bought the stock at like $1 something. They made money, but they weren't like, hey, we're going to hold this in our treasury. They wanted out. They wanted these companies to be able to operate on their own. So I don't know. I just think it's setting up a lot of opportunity. Um, and this opening today looks really interesting to me, not understanding why we're up. Um, I know Micron had earnings. The stock, I got tired of it. It was up, down, up, down, up, down. I'm sure it's probably up a little, whatever. But you got a
Yeah,
price on Micron?
165 spots.
So what is that, up or down?
It's down. It's pretty flat.
Flat. Right. That's what I'm saying. So what's got us up today? I'm really. It's not.
Honestly, I mean, Nasdaq's up a little bit more than the S&P, not by much, but a little bit. I think it was maybe that Baba news overnight is dragging this AI trade higher again to start the day. We'll see if there's a pop and fade out of the gate, kind of similar to yesterday. But
Yeah.
the one move, and I don't know if you've seen anything, have any insights on this. Probably the biggest, most interesting move overnight's happening in the dollar index. I've got the U.S. dollar index is up 63 basis points. The euro's down 0.6%. The dollar's up 0.7% against the yen. You're getting, and I don't know, maybe that's another side effect of Powell's comments. If there's less rate cuts now in the future, does that help support the dollar right here?
Yeah. I don't. I'm not 100% sure on all of that. That's just a sort of a tick trade. I'm bummed out. I got stopped in the euro on the highs, which is kind of depressing. But also, since I came in, the bond yields were at 4.10 on the 10 year. Now it's like 4.14. I don't know. I guess I don't see anything really. Building permits, nothing, and the bond backed up. So I think this reaction in bonds is a little bit scary. What's going to happen on the next rate cut? It's going to go to 4.5. I mean, it's literally having no effect. So we'll keep an eye on that. I want to get close to wrapping because I apologize. I actually have to record a podcast later, so I gotta get ready for that. But I want to sort of go over everything. Gold, down overnight, looked bad once again, back up. Off the high slightly, but that thing, you know, I'd love to know what's going on in that thing. And oil finally looks like it's tipping the top end of the range at 65 area. Keep an eye on that. If it breaks out of that, maybe we get a move higher, but it's been stuck between 61.80 and 65 for this whole couple of months. We touched on gold, we touched on the dollar, which is having the dollar's having a good day, and it's probably what you said. Basically Fed speak. It's funny because the dollar's having a good day, I believe, because they don't think there's as many rate cuts coming. And I think a really good bet is if Fed fund futures are still pricing in 85% for next month, I would potentially bet against that. It's a very, good risk reward trade.
Fed fund futures for next month is 94% chance of a quarter point cut.
Right. So I like that. I mean, listen, it's a shot in the dark. You don't have a lot to lose, but we're going to look to play that in a certain way, or maybe the December meeting. Maybe that'll be the one. But one of these two, I think, has a chance of not being put into play. So, we'll see. And it's funny, you got to watch these algos. Every hour on the hour, the algo pops in and like you see the futures go like this. I mean, it's like unbelievable. It's not even trading. It's like, they have this algo at 9:30 that just buys the market. Like it's every day. So we'll see if that shows up. But I think, you guys are prepped for the day. Just watch the market. If it gets weak, we may have a back to backer, which literally would be the first back to back down day in
Is that
probably.
allowed to happen?
No, no
Is there a
way.
back to back? Is there a back to back
Back to
down day
back.
circuit breaker?
Yeah, there's no way. But anyway, I'm gonna run. I don't know if you want to close with anything, but again, just watch for that. and keep an eye on interest rates. I don't know if you have anything you're watching.
Yeah, I guess there's two things really quick. We talked yesterday about some of the negative divergences happening under the hood. VIX was creeping higher. Bitcoin struggled to get above its 50-day, so those were some negatives out there, and we saw a little bit of the downside yesterday. One other, so keep an eye on that still. And the one other thing I would watch is we talked about how huge this AI theme is for the energy trade. So we're working on that report to come out here sometime soon. But how to play the energy side on the AI build out. But I bring that up because resource stocks were pretty strong yesterday. Energy stocks holding up pretty well. So I think that's a trade you want to keep an eye on there as all these $1 trillion figures keep getting thrown around in the headlines.
Exactly. All right. So we're back tomorrow, and I appreciate everybody for joining, and good luck trading today. Enjoy.